Everyone. Hello, and top of the noon hour to you. I'm Rosalind Booker. I am a board member of NARAB North Texas. We are here to serve your needs as a community, as an organization to improve and bridge the gap for home ownership for minorities. And we are delighted today, not only to have our team, our leadership team here, but a very special guest. Actually, it's family to NARAB, Miss Tamika Stembridge, and she's the director of dFree Global Foundation. And she is going to talk to us about the secret sauce, y'all, about what? Becoming debt free. And again, yes, I'm Rosalind Booker. I am your principal broker, CEO of Arbrook Realty. We are a full service real estate company here in the North Texas area. Also, executive director of Arbrook Cares, where we are linking arms and shoulders and hearts with community organizations, banks, financial institutions to what? Help renters become homeowners. We want to collab with you and provide education and resources. I am going to go around the room. We have some family. Oh my God, we could not do this without these pillars. They are definitely pillars, in a drum roll for the lone lioness, Miss Rhonda Hutchison.
Hey, I want to hear some roaring.
Let's get Chris do that. Chris roar.
Yeah, roar, Chris.
Hey, my voice might not be right for that today.
But I am Rhonda Hutchison. I'm also known as the Lone Lioness, and I'm a residential mortgage lender. I'm powered by Paramount Residential Mortgage Group. Oh boy, I'm so excited to be back on today to be able to link arms. And that's what I do. Like Roz said, we link arms with those like-minded individuals that are looking to do what? Bridge the gap between renting and home ownership to be able to move up from renting to owning so that we can build generational wealth and also build legacies that will live on and on. Again, I'm excited to be here. And once at the end of the show, I'll give my contact information. But I just want to say hello to everyone that has joined us via the social media networks. Mr. Chris, what you got for us?
Hey, guys, it's good to be here again once again on this Tuesday afternoon. Once again, I'm Chris Ziegler with the Ziegler Agency Allstate, located in Frisco, Texas, serving the whole state of Texas, the whole Metroplex. You name it, we do it. I'm a full service insurance agent. I do it from stem to stern. Of course, we also have home ownership and homeowners insurance and renters insurance and auto insurance. But people must remember I do other things as well. I do life insurance and do financial products as well. So just give me a call whenever you get a chance so we can discuss these things at 214-870-4269. And once again, my motto is customer service with a personal touch. And I believe in education and what?
Consultation.
Exactly. Consultation. So I'm excited to have Miss Stembridge on here with us today. And I want to give a quick shout out to everybody who donated to the code drive. And I somehow have to expand it because, we said the code drive, but people say, hey, can I bring jeans? Can I bring sweaters? And I mean, people were bringing everything for men, women, and children. And you talking about phenomenal turnout. And when I put the code drive on there next year, I'm going to say bring other items as well, too, because like so we had jeans, you name it, we had all those clothing items that people could use. So I was just so ecstatic and excited about everybody who participated. And it's funny, put it on Facebook, and everybody like, how come you didn't tell me about it? And I only put it on there like 3 times a week, a couple of times a day, and people say they still didn't see it. But once I put the information out there showing, the results, a lot of people saw it. So maybe it'd be the times when I put it out there. But with that being said, I'm going to turn it over to Roz and let her go ahead and pray us in, and then she can give an introductory salutations to Miss Stembridge.
Awesome. Thank you so much. Every heart lifted to heaven. Father, we just thank you for this wonderful day that you've made. God, we're glad about it. God, we are so delighted to be here today to gain and glean from this knowledge. And we say this financial tool, God, that Tamika is going to share. We should owe no man. We should owe no man bills. Our goal is to be debt free so that we can leverage the dollars and leverage our credit to create resources, streams of income, and build legacy wealth. God, it is our right, it is our inheritance. So we partner with Tamika and we partner with community and alliances, God, to forge our way towards being debt free. In your name, amen.
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 So,
Amen.
yeah, and we'll introduce to some and present to others Miss Tamika Stembridge. She, again, is the executive director of dFree Global Foundation. And Tamika, take it away, and we'll be interjecting by asking you questions along the way.
Excellent. Well, first, I want to say thank you all for having this platform and for allowing dFree to be a part of it. NARAB has been in partnership with dFree for a while now, and I would say special love to the North Texas chapter because you guys have been super near and dear to our heart in terms of partnership. And we do what we do through people and organizations like you. So when you say link arms, we're linking that chain as well. dFree is a nonprofit organization that was started by Dr. DeForest B. Soaries Jr., the former pastor of First Baptist Church of Lincoln Gardens in New Jersey. And his original intention was to help 1,000 families in his church get out of debt. That was the original goal of dFree 16 years ago. And here we are 16 years later. We've helped over 100,000, people to get their finances in order. We've helped thousands of organizations to be a part of our dFree network. And we do three things. We have content, we have curriculum, and we have programming. And with those three things, we provide organizations within the community, faith-based groups, sororities, and fraternities with our content so that they could get it out to the people. One of the things that people talk about, and I'll get into kind of the dFree philosophy. We were just talking about Financial Literacy Month earlier this morning. And one thing that Dr. Soaries focused on when he built dFree was that literacy wasn't enough because most people know what they should be doing.
Yes.
You know you should save money. You know you should try not to get in debt. You know you should save for a rainy day. But what gets in the way a lot of times is our lifestyle and our habits and our behaviors. And so dFree is a transformational lifestyle movement that helps people to deal with the spiritual, psychological, emotional, habitual aspects of managing their finances so that you go from being in debt to being able to leave a legacy for your family. And so the content, the curriculum is all built on this 12-step process that takes you through that journey. And we walk people through it, everything from where did you first learn about how to manage money? And everybody will tell you, nobody ever taught me. People taught you through their behavior. If they never sat you down and said, this is how you manage a checkbook, this is how you manage your money, you learned it from somewhere. Whether it was watching your parents, or for me, it was my grandmother taking me shopping every Saturday. So that was my money lesson. Is that you work all week, but you go shopping on Saturdays.
You got to reward yourself.
Yeah. It took a long time for me to learn the other side of what she was saying to me, which was also save some of everything that you make. I didn't learn that because I didn't see that. I saw her going shopping on Saturday. I didn't see her going to the bank to make deposits. And so we help to unpack that for people and then take them from there to where they need to be. And of course, there's literacy involved in that. There's lifestyle assessment involved in that. It's tracking your spending. It's looking at your budget, doing all those things. And so it really is a comprehensive process that we've successfully been able to take people through. And I'd be remiss if I didn't say it. We are primarily serving the African-American community because our journey is so unique. Money is green, but it's a different shade of green for everybody in terms of how you've experienced it and what you learn about it. And so dFree definitely takes into consideration all cultural background. We get into all the systemic things that have been built into the system that kind of keeps us in a certain position financially. But it's like knowing that, how do you move from a lifestyle perspective to get ahead of it a little bit? And so it doesn't ignore what history has done to us, but it hopefully empowers us to be able to move beyond it and say, okay, well, if this is the system we're dealing with, how do I best navigate and best take advantage of it for my benefit? So I'll pause right there because I know that was a mouthful.
That was good.
That was good. That was
Very good.
That's real talk.
I'm hyped. I'm ready to be here. So questions or where are we going with this? I'm ready.
Yeah, I'm very interested in knowing on the literacy side, and you mentioned the word psychological side. What does that look like in terms of programming or your offerings? Like other than content, other than literature, other than workshop, how do you hold people accountable? I mean, do you have people they interact with that are poised or qualified to work with,
The mind.
get down on
Yeah.
in the psychic of things?
Yes. Yes. So there's
Oh.
two things. So I'll say one, because the content is primarily based on Dr. Sori's personal experience with getting into debt, learning about managing money, and then getting out of debt, it's grounded in someone's real story. So it's not like I'm telling you, I'm going up to a whiteboard and writing down, this is what a budget is, and this is how you manage it. The content speaks to you through someone's personal testimony. And I know, we just prayed ourselves in. And so we know that we are freed by the word of our testimony.
Right.
And being able to be encouraged by that. So that's the first part of it. The other part of it is that we give people the tools and the resources to be able to do this for themselves. And so you start with dFree. We don't jump right into budgeting. dFree is broken down into 4 levels. And the first level is get started. And that level is 3 steps of nothing but assessing your money story and your money journey and getting people to think about how they got to where they are. Whether it was your shoe habit, whether it was your Starbucks habit, whether it was, being a middle child.
Can we add Chick-fil-A in there?
Whatever your $5 thing
I'm
is.
Guilty.
I remember, and see, Chick-fil-A is not even a $5 thing. That's about a $10 thing.
Yeah, that's $8 and about 70-something cents.
Get off my 10.
Exactly. So, and you know what's funny, and you laugh about that, but that's how we get people. So when you're introduced to dFree and in the training, it really is making it that simple. And so while it is there's a financial, aftershock for that, but it really is the lifestyle element that gets people tripped up. Because if you work every day, you bring home, a check, the assumption is that we're dealing with people that do have access to at least a salary or some consistent capital.
Right.
dFree is, while we can be encouraging to someone who's in a very dire financial situation, most of the people that come through dFree are middle income, college educated. They have some faith-based or spiritual underpinning. And so we got all the boxes checked. On paper, we look like we should have it together. The problem is we don't. And so we're driving our wealth. We're dressing our wealth. We're living in our wealth and not necessarily having the access to the capital that we should. And so when you talk about getting into the psychological piece, it's being able to strip all that off and say, okay, you drive a Mercedes. Is it paid for? Or how much do you pay for it a month? You live in, a luxury apartment. Let's assume you're pre-ownership, or even if you do own a home, you're living in a McMansion that you can't afford. So you got into a situation that is beyond your income capacity. And so for us, it's being able to strip all that away and say, in spite of, your budget or your bank account balance, you're still a child of God. And so if I took all this away from you, getting people to who they are allows them to now see, for lack of a better word, the error of their ways. And so that is how we get to the psychological part. And then we'll reintroduce the concepts of budgeting and spending planning and all that. But until you can understand why you are where you are, all the rest of this is just talk, because we all know better, especially given what I just told you about who we're dealing with. You went to college. You know how to balance a checkbook. You know how to count. You know what you should be doing, but it's the lifestyle pieces. And our lifestyle is driven a lot by our culture. It's driven by our familial history. It's driven by our experiences.
Right.
And so, like I was about to say, if you're a middle child and you got hand-me-down clothes your whole childhood, at some point you made up in your mind that I'm never going to have hand-me-downs again. I'm going to have the best of what the world has to offer. And so the minute you get access to money, you're buying the highest level, luxury, clothing items. You're buying the luxury car because you're trying to escape what you experienced as a child. Or, if your parents worked all the time and you said, I want to be present for my kids, or if you work all the time and you're like, if I'm not here, I'm going to make sure that they have the best of what the world has to offer because I'm not here. And so you may not be spending on yourself, but you're overspending on your kids. And so those are the kind of things that we have to unpack for people or get people to see for themselves, because otherwise you can't really see why you are where you are. Because again, on paper, I should have it all together.
Yeah.
I'm excited to have you on here today too, because I was watching Good Morning America. I think it was last Friday, and of course, with it being Black History Month, they had a young lady who does, I guess, financial stuff and talking about a lot of stuff we were talking about with NARAB, and she actually was on national TV. And I'm glad they had it on national TV for people to see, where she was talking about, we talk about wealth, legacies, and things of that nature. She went through the points of talking about how, in the African American community, our wealth is like she said on that day. She said 24,000, where our Anglo counterparts and some of the other people like $132,000.
Yep.
And I was glad to see that on a national stage, and kind of want you to kind of chime in on that as well, to kind of let some of the people know some of the things that you guys specifically do in order to get them to that point, if you can kind of get detail from that standpoint.
Yes. So, and I think that was Tanya Rapley. That's one of our peers in the financial journey. Shout out to Tanya. Hey, girl.
Exactly. Yeah.
So the bridging the wealth gap. So we do that also as part of the underpinning of dFree, understanding that from a legacy standpoint, like you just said, if most Black families only have about $24,000 of net worth, like your net worth is $24,000. So you pass away today, you have $24,000 worth of assets to leave to your family, or 9 times out of 10 to leave for creditors because you owe somebody.
Well, that's true too,
or somebody in your family owes somebody. So it's not, that's what you would transfer, in terms of generational wealth. Whereas most, white families are about anywhere from 113 to 132. The numbers you see fluctuate. Some of that is systemic. When you talk about real estate, you talk about redlining, you talk about us being not, discouraged from building wealth, and also barriers put in place for us earning. The earning gap, I think it's like August. It takes until about August for Black women to catch up with what other people were earning. And so there's a systemic aspect of that. But then while we're working to change systems, there's the personal responsibility aspect of it. And honestly, that's where dFree comes in. Because, yes, we can lobby and we can advocate and we can, try to work to change the laws. But if we don't get people to change their behaviors, giving someone reparations, if I gave you $50,000 tomorrow without understanding the basics of budgeting, understanding what net worth is, understanding your debt to income ratio, understanding all of those, the literacy of finances, that $50,000 goes tomorrow.
Yeah, gone.
Yep.
And we say it in our, when I talk about when I'm doing training, I always let people know that most people have a financial dream. They don't have financial goals. They're not tangible. There's this pie in the sky. If you got access to $1 million tomorrow, everything you're going to buy. I'm going to buy this car. I'm going to maybe buy this house. I'm going to buy these clothes. I'm going to automatically up-level my lifestyle. But there's not really a plan around, okay, if I get $1 million tomorrow, I'm 40 years old. I'm probably only going to be able to work for another 20 to 30 years if I want to work that long. What is my plan to get me to a point of retirement that is going to allow me to be financially stable?
I don't know who I'm still. I don't know, Tamika, who I'm stealing this saying from, but I heard that a goal without a plan is just a wish.
Absolutely, and that's what most of us have. We have a financial wish. I wish I had $1 million. That's what most people will tell you. They have no plan to earn it, or a plan of how they're going to invest it or spend it or create legacy behind it. And so what I'll say about dFree from a tactical perspective, once we deal with the psychological and emotional parts of it, the bread and butter of it is understanding your spending plan. We talk about spending plans, not necessarily budgets. One, because budgets feel restrictive. Nobody want to be told what to do. You don't want to be told what you can or can't afford. But we have people design a spending plan that's based on what they're earning, that they can afford, and also what their own financial goals are. So I told you guys before we went live, we purchased a home in the middle of the pandemic back in 2020. It was on my list of things to do, but it wasn't until I was able to sit still, I guess that March when 2020 hit, and that I realized that I need to actually focus on this if this is what I want to do. And so the good news is, because of dFree, and I've lived through dFree, which is why also it's a privilege to work for dFree. Getting ahead of your credit cards, getting a handle on your debt, understanding how much you owe, and not treating your debt like bills. That's one of the big elements of the spending plan, having people separate their bills, which is what you have to pay to live. That's water, that's lights, that's, health insurance, those kind of things, versus your debts. That's your car note, that's your credit cards, but then also versus your lifestyle expenses. Cable is not required for life. You know what I'm saying? Like the nail salon is not a requirement for life. Don't look at my nails; they're painted. Those kind of things. And while they're nice to have, we sometimes treat those things as requirements for life. And if you're treating everything on your budget as a requirement for life, you're never going to find room to get ahead financially.
Wow. Yeah, that's true.
And so that's normally the first time people see, oh my God, if I didn't have debt, I'd have this much more money available if I didn't have a car note. For a lot of people, a car note is a half of a mortgage. A car note is like, and you have that all your life. So if you go from one new car to another new car every, 3 to 6 years, that's $500 to $800. Hopefully, because none of us drive a little Kia. It's hard to find a cheap car these days. So a
Right.
lot of people are spending anywhere from $400 to $1,000 if they're driving a luxury car on a car note. That's your mortgage right there. If you're
Yes.
renting and you drive a luxury car, that's a
Exactly.
decision that you're making. And so for us, it really is getting people into the nitty gritty of what they're truly earning and what they're truly spending on a monthly basis, and then looking for opportunities within that to find room to be able to pay down debt and to get out of those strongholds that they're in. And a lot of us have it. If you have a Starbucks habit, that's
Yeah.
$100 a month, easy. And
Yeah.
that's just including the weekdays. They don't include your multiple Saturday coffees when you at Target. If you live near a Target like I used to, that's part of your stronghold right there. Because
Yeah.
you buying televisions when you need to be buying toilet paper. All of those things. Getting people reacclimated to the physical feel of money and what it feels like to spend money. Most of us carry debit cards, or you have your phone and you can tap to spend money. I can tap my phone and pay for gas. It is a lot more difficult for me to break $50 to fill up my gas tank than it is for me to tap $50 away.
Mm-hmm.
And so
Exactly.
people have
That's,
been trained to not feel what it feels like to spend money. Like I use the Target example. I love this. When I lived nearby Target, I could go to Target for toilet paper. But by the time I walked in the door, stopped at Starbucks, walk through the women's clothing and accessory section, because you never go straight to what you need. Toilet paper is on the other side of the store. I made the full Target loop, and I got a cart when I came in because I knew I wasn't just going to get toilet paper when I
yeah, right.
walked in. But I made the entire loop, and by the time I've done that, I done picked up clothes, jewelry, a television, a toy for my son, and by the time I get to toilet paper, the cart is full. And then I get to the register, and I'm putting everything on the cart. But if I'm paying with a debit card or a credit card, when I go put that card in the machine, I don't feel that what should have been a $5 purchase is now a $500 purchase.
Yeah.
Oh,
The
yeah.
swipe is a swipe is a swipe. It doesn't feel it until you look at your bank account. I'm like, oh my God, what did I do? But at this, and if I was carrying cash, I would have thought twice about buying a television. I don't want to peel off the $500 that I just spent instead of just, swiping for it. And so again, those are the nuts and bolts of what we do at a basic level to get the day-to-day under control. And then once that happens, then we start to talk about investing in long-term planning. So what are you going to do either once you're getting out of debt or as you're getting out of debt? Teaching people how to save, how to pay yourself, build an emergency fund so that when life happens to you, even if you are working to pay down debt, don't use all of your available cash to pay on debt, because when something happens, the only access to capital you have is now your credit cards, because you weren't saving anything while you were paying down debt. And so it really is, we call it our dFree lifestyle continuum, where it's getting out of debt or figuring out a plan to get out of debt, building your emergency fund, building your investment portfolio, protecting your assets. So Chris, that's where you come in, making sure we have enough insurance to cover the stuff that we own and what we plan to do later on, and then leaving a legacy. And if you do the things in that order, then it naturally progresses, and you're not investing before you pay off debt. Everybody now is like, I want to buy Bitcoin, I want to get in the market. That's trading. That's not investing. If you are carrying debt and you are investing in the stock market, unless your returns are more than what you're paying in debt on a monthly basis, you're still in the hole. You're just playing games. You are prolonging your financial process because you're accumulating debt. Like your debt hole is building faster than you're getting up the mountain. And so we try to help people to understand, put things in right order, do things in decency and order so that you can get to that ultimate goal.
Wow. And I have a question, and I don't know if you probably would have a solution for this, but how does, of course, as a lender, one of my major pain points in what I see, I'm just going to be real, especially in the African American community, because we have to take on that expense of student loan debt, which is one of the major holding. We'll just say holding us back from being able to move forward as far as being debt free. How does that fit into your portfolio, or is there some kind of plan? And I know that it's not going to go away. We're hoping that it would with Biden sometime soon.
That's one of our biggest prayers.
That's what our prayer is. But,
Yeah.
I just want to know if you have a plan and how that fits into your goals and
so student loans, we treat it like any other debt because it is one of the things that you can't get rid of. You can't, bankruptcy is not going to wipe out student loans. Your death is not going to wipe out student loans.
Right. Correct.
But what we tell people is that you have to get the same way you need to get into a solid financial position with your creditors. You should be in that same position with your student loans. So I bought a home with student loans. I have a law degree and an MBA. So I have a whole other house worth of degrees that I have. But the good news is I pay my bills on time. And I've gotten into, and for people that say, oh, my student loan payments are too high, take advantage of the offerings that allow you to reduce your monthly payment so that you can make it fit within your budget. Most people put their head in the sand because they can't even imagine being able to pay that bill. But again, if you were on income-based repayment or some other plan that reduces the amount that you're obligated to pay every month, and you pay that amount consistently, you've now gotten into a better position from a credit standpoint because you're paying on time, you're paying consistently. And while your student loans may not necessarily be going away, at least your financial picture overall looks better. And let's say as you pay off your credit cards or as you pay off that car note, you're now able to pay more on your student loans. And the more that you're paying is now going to help to reduce that. Like, you have to treat it the same way you treat any other debt. We recommend people use the snowball method or the avalanche method. I'll explain it. Snowball method lists all your debts from lowest balance to highest balance. And what you're going to do is try to pay off the smallest debt first, pay it off completely. And whatever you were paying on that bill every month, you take it and apply it to your next highest debt. And so if you were paying a medical bill that's like $150, but you were giving them $10 a month, pay the $150. Don't buy a pair of shoes a month, pay the bill off, take that $10, and now you're going to apply it to your Visa bill, whatever that next highest bill is. You're going to still pay the minimum payment on everything. But now, because you're adding more to it, you're going to start to feel the effects of being able to pay your debts off faster. And you start to see balances go away fairly quickly.
Tamika, I have a question. As a real estate professional, serving my client, what advice can I give to them for those who are like, okay, matter of fact, it's a good thing I paid off all of my debt, but my credit score dipped. It went down. So it took me out of qualifying for the best interest rate, loan programs, etc. So what's I wouldn't say comprehensive, but is there a rule for people whose aim is debt free, but they want to purchase a home?
Yes. So what's interesting is that many programs say they want you to be debt free, but they're anti-debt. dFree is not anti-debt. We're anti-debt and credit as a lifestyle. We are definitely pro debt and credit as a strategy, a financial strategy. So to your point, you need to be able to manage credit wisely. You have to have credit in order to be part of the system. And so that means as you're paying off your credit cards, you might need to charge something once a month to keep the account open. Charge it, pay it right off. We don't recommend you close accounts as you pay them off because, again, that's a part of your credit history. It's a part of your credit profile. Once it's paid off, it's going to show positively on your credit report. And so it is balancing all of those things. We are not anti-debt and credit. We know you have to have it in order to participate, but you have to use it strategically. If you are consistently having to rely on a credit card or a personal loan or, God forbid, a payday loan in order to make ends meet every month, you are beyond your capacity. And so for us, it's about getting you to a point where you can function within the income capacity that you have and then have a plan to pay off and pay down those debts and use them responsibly. So you might put your gym membership on a credit card, $19.99 a month. You know when it's coming out. You know when to pay that card, to keep it open, to keep it active, and to have a positive history on it. So it's not that you want to be debt free and close everything out. You want to be using debt and credit responsibly because that's what a lender wants to see. They want to know, can I trust you giving you a mortgage? Are you consistently going to pay the bills?
You said you told us about the snowball effect. Explain the avalanche to us.
So the avalanche is the same thing, except you're going to order your debts based on interest rate. So you're going to list them from highest interest rate to lowest interest rate. And your goal in the avalanche method is to pay the thing with the highest interest rate off first. Why? Because over time, it's going to be cheaper for you.
Right.
Now, the challenge is the thing with the highest interest rate
It's the
tends to be
highest
the thing
payment.
with the highest balance and the higher payment. And so it's not as encouraging as the snowball method, because you can start to see accounts go away like this with the snowball. So one of the recommendations that I personally make is that, especially because getting out of debt is it's emotional to understand where you are. It's even more emotional to have to commit to a plan that's going to restrict your lifestyle a little bit, require a little bit of sacrifice, but you want to see some results. So I recommend starting with the snowball method until, let's say, you have, you've done that consistently and you've freed up enough income monthly that you can flip it and then go to the avalanche method after that. So let's say, I got a bunch of small bills. So maybe I pay my 5 smallest bills off, and that now gives me access to an extra $500 a month. I'm going to switch to the avalanche method, because throwing an extra $500 on a bigger balance or, a higher interest rate is going to have huge impact and help that process speed up a little bit more. So now I've gotten the feeling of paying things off, and now I can switch and do the more financially sound way, which is the avalanche method, but it's not as encouraging. It takes you longer, at least mentally, it takes you longer to see progress with the avalanche method.
Right. Tamika, you said a lot of people have, student loans and things like that, which is pretty common across all ethnicities and everything, especially in the Black community. But that being said, you said offerings. What kind of offerings are out there that people can take advantage of when it comes to student loans?
Yes. So if you have federal loans, there are income-based repayment plans. There's also loan forgiveness programs. And they actually made modifications, I think, at the end of last year going into this year. So if you work in public service, you work for a nonprofit, you're a teacher or something like that, they have public loan forgiveness programs where if you pay consistently, I believe it's 120 consistently paid student loan payments, for most people, your balance will be forgiven at the end of that period. But you have to pay your bills on time. And so what I've recommended for people, and this is specific to federal loans, private student loans is the same as private debt. It's almost like having a credit card. There are very few and far between benefits or ways out of private student loans. And what I would say to this is that in the middle of the pandemic, what a lot of people, while interest rates were frozen for federal student loans and while payments were frozen, companies started sending out letters in the mail to try to get you to refinance your student loans. A lot of times when you refinance federal loans into another product, it now takes them out of the federal system and makes them private loans, which means any of the benefits that you could have gotten under the federal program are now erased. So I challenge people, if you're thinking about refinancing your loan, if you're going to refinance, see if you're able to do it into another federal loan product so you keep those protections. Try not to turn your federal student loans into private student loans, because then there's no relief for you. The number is the number is the number, and you're going to have to pay it regardless. But again, it's income-based repayment, it's student loan forgiveness. There's also like a disability clause under some of the forgiveness policies. I've seen, there's a woman, the student loan doctor, Sonia Lewis, she's the only Black woman-owned student loan service provider in the country. She does advice and counseling for this. It's her expertise. But there is a caveat in one of the student loan forgiveness packages that if you're on total disability or you have certain disabilities, you're able to get your student loans wiped out. If you were given student loans under duress or almost like fraud. So there's been a lot of people that have taken out student loans for for-profit universities, or they were just encouraged to take out loans, unfairly. You can fight your student loans that way. But again, I recommend income-based repayment for most of us that have federal student loans, because what it does is it adjusts the amount that you're required to pay every month based on what you earn. Now, I'll say this, what it will do, unfortunately, is extend the amount of time that you have to pay, because you're not paying as much on the loan every month. But what it does allow you to do is to bring your payment within what your budget can afford. And in the sense, in the case of wanting to move on with your life and continue to do things, even with student loans, your goal is to be able to keep your credit preserved and be able to live within a budget, to not be overextended. And so you want to be in a positive financial situation with your student loans. You can't just ignore them. It is not something that the banks will ignore. It is not something you can afford to ignore. You have to pay something. And so you want to be able to pay within what you can afford. And that'll give you a little bit of comfort, even though they're there and we're dealing with them.
You're 100% on point.
So, Rhonda, I have a question to interject. In a client, our customer, mine and your mutual customer, if their goal is debt free and they're paying down their credit cards, what is a lender or what provides the most points on the credit report? The debt utilization to stay under what number? Is there a number?
And it depends on the program. Of course, if you have what we're conventional, which is like you said, more like private, you're looking at a lower debt to income because they require lower risk. If you're looking at the programs like your FHA or your government loans, then of course the debt to income is higher because it's an affordable housing program as well. They expect you to have a little bit more debt, and they're trying to work with you to get into a home. So, and that's right now, that's like right at no more than 57%. So one of the things that Tamika talked about, and she was 100% on point, is making sure you don't pay those. If you have a goal and your plan, make sure you know what your goal and your plan is. Is that if you're getting ready to get into a new home, that's the worst thing to do is to pay all your debt off.
Right.
Because what it does, it takes away your positive credit history. It's now showing it's almost like you don't have any credit.
It's like nothing. Yeah.
Right. So you always want to consult a professional, a lender, and so let's look at your credit report. Maybe you have 5 credit cards, and you just opened 2 of them last year. We can pay those off. But if you have something that's 10 years, 15 years, 5 years, let's just pay those down to 10% or less. And some credit analysts say pay them below 10%, but I said at least 10% or less below 10%. So you keep that positive credit history as well, especially for the longer accounts that you've had for a long time. And so, paying all your debt off can have a negative effect, especially if you're wiping your credit history away.
Yeah.
And another thing, I'm sorry.
I have a question for you, because one thing I do, and I'm going to do you guys incorporate this in your program as well. One of the strategies I use with my customers and clients, sometimes people, they don't take advantage of their 401ks and things of that nature. Sometimes they ask me about different things that they can do in order to, build up cash value in their portfolios and things like that nature. And they come to me about different products. I have different products, but the first thing I did, I said, you might want to do the free thing. So you say dFree, the free thing, play on words, the free thing to do is, I said, to maximize what you got at your job. Because a lot of people don't access the 401ks. They don't go with the matching funds and things like that. Do you guys kind of instruct them about how to utilize the thought process?
Yes, absolutely. Again, we talk about, most people don't, if they have a 401k, they don't know what's in it. They don't know what's contributing to it. They're just looking at that line item on their pay stub, like, where is this money going? We recommend that you, at the very least, invest as much in your 401k as your company is willing to match.
Exactly.
And if they're not matching, you should still meet with a financial advisor. That's one of our biggest recommendations, is to meet with somebody to talk about your ultimate long-term goals and get someone that can help unpack what's in your 401k or within your retirement plan, because most of us don't know. The other big thing that comes up around 401k is because we always want an easy way out. We're like, well, should I go in my 401k to pay off my credit cards or to help little Jimmy go to school? No, do not borrow against your future to pay for your past mistakes. It is one.
Love that.
If I go back to the lifestyle conversation, it didn't take you, 2 months to get into debt. It's not going to take you 2 months to get out of it. And what you don't want to do is to borrow from your future retired self to pay for them shoes that you bought when you were in college.
Exactly.
It doesn't make sense when you think about it that way. And the behavior that we're trying to create is one of positive financial and lifestyle habits. If you're always thinking you could take the easy way out, while I'll borrow from over here to pay for that thing, you're going to just run the credit card back up because you haven't learned the lesson.
Right.
So you really want to be able to, on the debt repayment side, to really create the lifestyle that'll allow you to do that. And on the long-term planning side, create a strategy that's going to be so that your future self can afford your future life. Most of us, again, have a vision in our heads of what we want to do in retirement. We don't necessarily have the fiscal plan that matches that up.
Gotcha.
And
Right.
even for you guys as realtors, you know, I don't necessarily know how people do this. If they come to you and say, oh, I want this $1 million home, you know, how old are you? How long is it going to take you to pay this off? Is this a home
Right.
that you're going to want to have for the rest of your life? If this is your only property, do you want a mortgage of XYZ if you're going to be,
Right.
you know, 56 years old and working? And those are the kind of questions we have to ask ourselves, again, because we have these $1 million wishes and $1 million dreams. And a lot of us, thank God, you know, with entrepreneurship and people moving up, you know, in the financial world, we're able to afford those things. But are you able to sustain that lifestyle if
That's
that's
the
what
key.
you
Yeah.
envision?
Yeah.
And so those are the kind of hard questions that we have to ask ourselves and challenge. And it's not, I never want to crush anybody's dreams, but I just want people to be in a situation. For me, it's, are you living at a place where you can be at peace with everything that's happening in your life? If you're going to be stressed out with this McMansion, just get a smaller house.
Amen.
Wait, I love that, McMansion.
It drives me nuts.
It's,
I'm sorry, the one thing I wanted to
no,
say real quick, because we mentioned renters earlier. For people that are renting apartments, prior to, I would probably say about 2 or 3 years ago, most of your rental payments and your payments for utilities were not counted in your credit report. And so we used to see people in dFree say, I've paid my rent on time for years. I've paid all my utilities on time. I'm ready to buy a house, but they told me I don't have any credit. I don't have any credit history. Well, now many apartments and even outside agencies are allowing you to be able to report your positive rental and utility history to the credit bureaus so that you can get credit for that towards your credit report. So if you are a person that's renting and may not have a lot of credit card debt or other, you know, other financial instruments that would apply to your credit report, look into options so that your rental payments can be reported to the credit agencies so that that can count towards your overall credit profile. And again, it's not a one size fits all for everyone. But again, if you're a person that always pays your bills on time and you don't have a lot of debt, that's a great way to build credit history without having to open up new accounts and do all these other things. And so I don't have the agencies on hand. Just Google rent payments that report to the credit bureau. A couple agencies will
right.
pop up. They do normally charge a fee anywhere from like $1.99 to $4.99 a month, but it's worth it if you want to boost your credit score or if you just need to add some padding to your credit history because you don't have a strong credit profile.
Yeah.
I just wanted to
And I
put that.
want to piggyback off of that, just being a lender and how it works. And I'm sure that there are some difference in different lenders. But yes, we will allow you to use your positive credit history, which is the great thing about it. If it's negative, then you don't want to talk
Yes.
about it. Okay.
That what the sad part is the negative stuff is already going to beat you to it. It's already
Yeah.
going to show up that your rent isn't collected. So it's already
Right.
there.
Right. But if you're at the cuff where you're not being what we call approved eligible, and you can bring your 12 months rent history into it, but what happens is not reported on your credit report. And like I said, lenders may be different. We pull it. You have to give us access or permission to pull your bank statements or
Got it.
provide us with those documentations to show, here's my 12-month rental history. We can use that to be able to possibly increase your chances and lower your risk to be approved for a home. And so
Absolutely.
you're right on that, Tamika.
And to make one thing we do, you know, but me being an insurance agent, one thing I'm really big on is trying to make sure people protect their assets, whether it be their home, their cars,
Mhm.
and life insurance. I've seen so many people get derailed financially because they might have insurance, but sometimes they don't have the right coverage or enough coverage. And going back to what you were saying just a few minutes ago, I mean, like when these storms, like the storm came last year, the winter storm, people didn't have enough insurance. I make sure all my people are covered properly. That's what we do at our office. You have people get a $500,000 house. They say, I want to insure it for $250,000. Here, we don't do that. If you have a $500,000 house, we're going to do it for $500,000.
At
And
least.
you see people get,
Right.
let me just be frank, get jacked up because I'm even go back even further. You guys remember that storm we had the day after Christmas in 2015 in Rockwall, Garland, and Rowlett? You have people to this day who still cannot get into their houses because they didn't have the right coverages, or some of the ones that did get into the house had to use their 401k because they didn't have the right coverages. So if they would have had the right homeowners insurance, that would have helped them out from that standpoint, you know. And then too, a lot of times people get derailed too. Sometimes we have an unfortunate situation where people don't have life insurance. So like you said earlier, you said that $24,000 that median money they might have. I said that pay for the burial, but once again, like you just said too, if they have debt, that money's going to that. So then you're going to be in the quandary instead of spending two. That's what excuse me, Pookie and Ray Ray and them trying to get that GoFundMe and all that kind of stuff. And that's what
life insurance and just insurance in general. When we talk about protecting our assets. So if you've gotten to the point where you're paying down your debt, even if you're not completely out of debt, one of the line items that will not leave my budget is my life insurance policy. One, because there's one policy that covers the house. There's one policy that I have that covers my son and the well-being for him, once I'm gone. Making sure that you have things in place, disability insurance and long-term care.
Yeah.
A lot of us will get hemmed up. You will get sick and be debilitated before you pass, and your life insurance is not going to cover your mortgage.
Yeah, that's so right.
Your medical insurance is not going to pay your bills if you're sick and recovering from a bout with breast cancer, or you had triple bypass surgery and you can't work for 6 months. A lot of us are underinsured in those areas, and we are absolute advocates for having sufficient insurance to cover your now and your next. And, and a lot of times, insurance, people say, well, insurance is so expensive. Get with a financial advisor or someone who can look at what your personal financial situation is and put the right things in place. You might need to start with all term policies. A just in case until you're able to afford some home or some cash value policies that may be a little bit more expensive. But again,
you can work with me.
Nothing. Yeah, exactly. Call Chris. He can do everything. Chris will get you straightened out because it really is important. And you hate to see people have to, again, dip into retirement or have to borrow money against their home to cover things that happen in life, because life is going to happen.
Exactly.
And insurance is to cover those life happenings.
Right.
You wouldn't walk around without health insurance and get hit by a bus. And so let's not walk around assuming that we're going to be completely healthy in our full lives, that we're going to live forever. One of the things we say in dFree all the time, the one thing that we're all promised is death. And so if you're unsure about anything, you are going to
die. Sure about it.
Yeah. And so you might, and a lot of times, when we talk about the wealth gap, life insurance is one of the keys to helping us close the wealth gap.
Yes.
Because so many of us aren't going to be able to earn our way into having that financial wherewithal where we're able to catch up. But a good life insurance policy can set your family and your children and your children's children up for life.
Yeah.
And you can be the person that changes that.
I was going to tell you, the life insurance policy, sometimes they can cover that. They have what we call riders on some of those policies. So sometimes if you have certain riders, it can cover, stuff like cancer or some other issues as well. And then I think last year we were talking about supplemental insurance because we had a young lady, one of our members, Madge Day, was on here, and she was talking about, health insurance. And we were saying people don't realize health insurance usually only covers probably anywhere 6% or less. So that's where, I do supplemental insurance. She does as well. And you want to fill that, once again, you want to fill that gap because a lot of people are like, okay, I have my insurance. If you have a $600,000
I can't afford my part.
Yeah, exactly.
You got $40,000 left. People are like, why still have this bill? Because it's only going to pay so much. So you need to have something. And supplemental insurance is not that expensive,
No.
And
you're paying for the what if. And I'd rather be prepared for the what if than to be unprepared for the what if. It's a lot more expensive to not be prepared. Yeah. But again, I'll say this. It is very difficult if you're in a position where you're in debt, you're struggling month to month, you can't make ends meet, to try to think about all of this.
True.
And so again, I'll tell you to get back to your basic, look at what's happening day to day, look at what's happening month to month, and let's get that under control. Start paying down your debt so that you create room in what you're earning to be able to afford some of these other things. And so, but again, it's all about planning. You might say, okay, I'm going to give myself 6 months to get my debt under control. If things are outstanding, if things are past due, I'm going to get all that stuff caught up. I'm going to pay off a few things. And if I could just give myself access to $500 extra a month in 6 months, now that becomes $100 you can save a month. $100 you can buy a term life insurance policy.
Right.
$100 you can put on emergency savings, and an extra $100 to pay down towards your debt. You have to think about it that way and eat the elephant one bite at a time. But unless you start at the beginning, jump into the end is not going to help you. Going to meet with an advisor and buy life insurance when you can't afford groceries doesn't make sense.
It doesn't make sense.
If you do it in order, you're able to do it, and it takes time. It takes time. It takes patience. It takes commitment. It takes sacrifice. It takes no Chick-fil-A for a little while.
Better give up that Chick-fil-A. Oh,
and Tamika, like, I'm gonna tell you like this too. Like I told somebody once before, I said I'm not saying you don't have to get that pedicure anymore, instead, but getting that 50, do the 25, put that other 25 somewhere else.
Or you be like me and you buy your own nail polish and you just polish your toes and scrub your feet yourself. Dr. Stories always uses the car wash example. He's like, if you're in debt, the water at your house is just as wet as the water at the car wash. Save the $20, wash your car yourself, get some exercise. When I was going through dFree, when I'm looking through my monthly expenses, there was a place that I was paying for every month that was in my bank account every month. They taking it out that I wasn't showing up at, called the gym.
Yeah.
And so many, we're only in February. A lot of us have signed up for gym memberships. We scared because of COVID. We scared just because we don't want to get on the treadmill. And you're still paying that $20 to $30 a month. Look for those opportunities to get money back into your hand. And whether it's that, magazine subscriptions, Netflix, there's so many, like people say, oh, well, get rid of cable. That's a big one. If you get rid of cable, they save themselves $200. The problem is we've replaced cable with Netflix, Paramount Plus, every little streaming service out there, and now you're still paying $200 a month. It's just $20 at a time. And so you have to, again, be mindful of where your money is going.
Right.
And it's not being obsessive, it's being intentional. If you are serious about getting your financial life in order, you have to be able to look into every nook and cranny for everything. I have a toddler. I compare diaper prices because this store went up and that store went down. I'm looking for the opportunity at every point. And so, again, it's not to be discouraging. Our goal is to empower people to take advantage of where they are financially. And the last thing I'll say, I know we only have like 10 minutes left, is that if you are in a position when you go through the numbers and you just see you skinny down as much as you can skinny down, and there's always more month than money, then you have to look at opportunities to increase your income.
Yeah.
Do you need to drive for Uber? Do you need to do Shipt and deliver groceries? What can you do with the little bit of extra time you might have to fill in some of that gap? Because again, if you're intentional about your goals, you will do whatever it takes to get there. And sometimes it's just a little bit of fuel. If I just do Uber for 6 months and save that money or apply it to this, debt that's past due, I can get myself caught up. But again, you have to see it in order to know that that's what needs to happen. And a lot of us are just living day to day and pulling out a card. And when that card don't work, pull out another card. And you can't expect to get ahead if that's the way that you're functioning. And so for us, it's again, helping you understand that you are not your possessions. You're not your bank balance. Yes, we're African-American and the system has been wrong to us. But even as the system changes, if we don't change our behaviors, our mindsets, our lifestyle, we'll be in the exact same position we're in, even if the floodgates open and we get reparations or student loans get canceled. Y'all wasn't paying y'all student loans to begin with, so there's no extra money in your pocket. You're adding things if they get wiped out. It probably won't take it off your credit report. It'll sit there and just say that you owed all this money. And so again, we have to really adjust our lives to align with what we want out of this life.
A mindset.
Yep.
I love what you said. As many things as we can get free or alleviated from the credit or paid and relieved, that still don't change who we are on the inside.
Absolutely.
I do some small group coaching myself, and one of the things that we talk about is that acronym HAS, changing the habits, the attitude, and developing those skills that we need to get where we want to go. And I tell you, them habits are a booger. And we intentionally hold on to things that we have control to do something about. Because one thing, you're sitting here with all of this invaluable information in a toolbox. But how many times do you teach and teach and teach and teach this, give people the toolbox, and they still walk away 5 years, 10 years down the line in the same place, or even worse, because they've not applied it.
Yeah.
Or they applied it and went back to it. So that's the one thing I'll say. The two biggest things that we offer in dFree right now, and it's available to groups and individuals, is our dFree Online Academy. It's an online course. You get access to all of our courses. If you go to dFree.com or mydfree.org, you can get access to all of our courses, and you can get access 24 hours a day, 7 days a week. So you need to pop in and take a course, it's right there. We also offer the $1 Billion Challenge, which is our platform to help African Americans pay down $1 billion in consumer debt. And the goal is not to just get out of debt, is to take that money and apply it to savings, insurance, and investment. So to date, we've paid off close to $35 million together as a people.
Wow.
We have saved over $1.2 million as a people. And so our goal is to do this together to keep ourselves encouraged. We're also right now offering, I believe the course starts tomorrow, is a live version of the dFree class. So if you're interested in taking a course right now, you can visit dfree.com, mydfree.org, dfreefoundation.org, or just send us an email, info@mydfree.org, and we'll get you set up. But there's a live class that's starting for the month of February that will take you through the dFree curriculum. And to your point, there have been people that have gone through dFree, gotten out of debt, and ended up back in our class in a couple years because they went through dFree, but dFree didn't go through them. So they got bored. And so now you out of debt and you back at TJ Maxx at Marshalls because you don't have nothing else to do. And you're using your cash. You're not relying on credit cards, but the habit is still there. And so again, like I said, this is lifestyle. You have to understand why you're doing what you're doing. And, we get retired people that say, I don't have nothing else to do but go out and spend money. So I'm at the Walmart every week. And now, I can't, and so again, it's about staying in community and staying connected to resources that are going to keep you moving in that positive direction. We also added what we call our Monday Night Live community, where people that have gone through dFree or people that are going through dFree meet in a setting just like this. We're online, we're virtual, we're helping to hold each other accountable because it's hard, especially in the pandemic, where you got access to Amazon and Target and all that right here in your hand. And if you're anything like me, you're scrolling Instagram, you're like, oh, I like that. And it don't take but 3 clicks of a button and you done spent money. So we're helping to combat that. And so I just wanted to drop those things as resources that you could take advantage of now to keep yourself in the habit of all of what we just discussed. Because the minute you walk away from it, the world is out there ready to sell you something.
That's
and
right.
You have to be of sound mind and body to combat that.
That's awesome.
Hey, Tamika, we really appreciate you being on today. And we're going to go ahead and do our round robin here. And we're going to do the announcements in our round robins. So I'm going to let Roz go ahead and kick it off. We just, once again, thank you for all that wonderful
information.
Thank you
guys so much for having me. This was great.
Yeah.
All right, I'm listening because I might be needing to tap in. I'm listening.
Awesome. Well, again, thank everybody for listening and those who will come back and replay. This has definitely been a blessing, a wealth of knowledge and opportunities to become debt free. And I just want to thank our president, Miss Laura Washington, for allowing us to be here every second and fourth Tuesday at high noon for an hour of power. We are Realtists Creating Pathways to Home Ownership, and we are leaders in the NARAB family. I'm Rosalind Booker, Principal Broker, CEO of Arbrook Realty, and the executive director of Arbrook Cares, our nonprofit, which is a 501c3. We're linking arms with community and alliances, banks, financial institutions to help renters become homeowners. And I will say, on behalf of NARAB, we are looking for appraisers, home inspectors, wealth management advisors, CPAs, real estate tax attorneys, elder attorneys, probate attorneys, and commercial lenders. We need to hear from you. If you are a part of NARAB, we want to schedule you sometime this year to come and share about your offerings. So, Rhonda?
Okay. And I'm Rhonda Hutchison, the Lone Lioness, powered by Paramount Residential Mortgage Group. And Tamika, thank you so much. I mean, even though we heard about dFree last year and we had Ms. Janaya come on last year, but thank you for coming on and powerful information. I'm in here. I was like, I forgot that I was on the show. I'm just overwhelmed about all the great information. But just like Ross said, and I'll say it again, we're linking arms with those like-minded individuals. I am linking arms. We all are. And again, thank you, Ms. Laura, for giving us this, allowing us to have this platform to share. And you can contact me if you have any questions. Any questions about how do I get prepared? What debts do I pay off? What do I need to do with student loans? Because I'm giving that advice every day. Let's get your student loan debt. Get you in a position to purchase a home by lowering your debt to income. So if you have any questions for me, give me a call at 214-856-3747. Once again, that's 214-856-3747. I'd like to speak with you. Let's get a plan and how we can move forward to building generational wealth. Mr. Chris?
And I'm Chris Ziegler with the Ziegler Agency Allstate, located in Frisco, Texas, serving the whole DFW Metroplex and the whole state of Texas. But I'm going to use the rest of my time to make sure I get these announcements because Ms. Laura won't whip my knuckles. I'm not getting it out there. And just want to give you guys a quick reminder too about the winter meeting that we're going to have in San Antonio. The deadline for registration is going to be, I guess it's 2 days from today, February the 10th, and the reservations for the hotels is actually today. Today is the 8th, so the final day for reservations for the hotel is today. So make sure you get those things done. And if you have any questions in regards to that, just give me a call at 214-870-4269. And then we have our installation of officers next week. February the 15th, 2022 is going to be at Abuelos right there on the Central Expressway in Plano from 6 to 9. And it's called the Blue and Gold Affair. So we definitely, hopefully, our members come out for that. And the deadline for the RSVP for that is going to be Valentine's Day. So don't get caught up in your love bugging and all that stuff and forget the RSVP. So make sure your RSVP on the 14th so we can have a great turnout. And we're going to be doing a whole bunch of great things there, going over the history of NARAB and have some videos from when Dr. Martin Luther King was partnering with the NARAB back in the 60s.
Wow.
So that was huge. So it's going to be a great and exciting time for everybody to come out and check out. So, Ms. Tamika, once again, thank you for being on today. And Roz, I'm going to let you take us out.
Awesome. I needed to leave my number for Arbrook Realty, Arbrook Cares. You can reach out at 972-996-4702. That's 972-996-4702. And until next time, you guys be safe. Don't spend too much and try to get debt free. Come on now. We'll see you the 4th Tuesday of this month. Bye-bye.
All right. Thank you, Tamika.
Guys, thank you guys for having me.
All right. Bye-bye.
Bye, Tamika.
Bye.
Bye-bye.